day, guys. Welcome to Julius Academy, and our topic for today is accounting error. So we are still under basic accounting process and system. It course under ATSWA ICAN, and this is what we have for you guys today. So yeah, we are going to be treating accounting error. Yeah, of course, I was going to treat it anyway, but I observe whenever I'm teaching some of my students, they do have issue and difficulty with this particular topic. They say it's difficult and the likes. But here I am. I'm going to explain it bit by bit so that you can understand it very well. Now, what I'll be doing in this class is I'll be explaining the theoretical aspect. That is, I might not necessarily touch much calculation on this, but I will explain the concept for you. Alright, so accounting error, yeah, yes, when something is wrong with your balances. So we have two categories of or classification of what accounting error. We have errors that will not affect the trial balance and errors that will affect what the trial balance. Now, keyword error that will not affect trial balance will not pass through what we call suspense account. Don't I will explain what suspense is for those that don't know what suspense is. But errors that will affect trial balance you pass through suspense. Another key word that you need to observe or to take note of is that for errors that will not affect trial balance, most of the time there are more than one. That is, there are more than one account involved. That is two upward. Let me just put it that way. But for errors that will affect trial balance, most of the time it is usually what, or it is just one account that is what affected. And that's why we need to make use of suspense to balance it up. Alright, so my main focus for this class is errors that will not affect trial balance. Alright, so let's start with that. Errors that will not affect trial balance. So they are the type of error that will occur in the sense that even when the error occurs, your trial balance is still going to balance. For example, in our previous class on trial balance, there could be an error in it and we will not be aware because our trial balance was still balanced. You understand? So yeah, let me tell you the types of error that falls under error that will not affect trial balance and how we will deal with it. You understand? So now the first one is error of what? Omission. So first on the list is error of omission. Now, what's error of omission? It is the type of error that occurs when the transaction is what? Completely omitted from the book of accounts. That is, you did not record it at all. So a transaction that you did not record at all will not affect the debit side or will not affect the credit side of any of the transaction. So that's the effect of it. So how do we correct this? How do we correct errors of omission? It's very simple, and that is why I said you guys need to know your double entry principle very well before moving into other courses. And if you don't understand what double entry principle is or you do not have an in-depth understanding of it, I suggest that you watch it before we continue with this video so that you can have the in-depth knowledge of it and the ability to apply it. So an example, let's assume that there was a cash sales of 100,000 naira. Cash sales of 100,000 naira was what? Completely omitted from the book. And they ask you to correct this in your journal. How do you do it? Remember, my goal here is not for me to solve, but just for me to understand. And this is just a rough schedule. So when you have the cash sales, what's the normal double entry? You debit what? Cash 100,000 naira, and you credit your what? Sales. So this is the most simple, or this is the simplest error to correct because you just post your normal double entry to correct it, and that's it about that. You understand? So that's all on what? Error of omission. It's just that your transaction is what? Completely omitted. And how do you do it? You just do it, you correct it by what? Recording it. Now the next is what? Error of original entry. Yeah. Look at the word error of original entry. So this is the type of error that occurs that starts from either the source document or what? Original entry. Another name for original entry, is day book or subsidiary book. So yeah, this is when you record the wrong amount, or you can say wrong figure, into the original entry, book of original entry. You understand? So the error here is from the book of original entry, not necessarily the ledger. You understand? So how do we correct it? We correct it by recording the difference of the amount. It could be excess or it could be shortage. So it is not fixed, because I observe most of you guys are probably used to one specific aspect of it, either it is shortage or excess. So it could be shortage or excess. I will give example of this in our subsequent class. So when you want to record it, it varies. There are various ways that we can solve it depending on the circumstances. So that's one mindset that I want you guys to have, that there's no one way or one fixed routine of solving what? Error. Error is very tricky, and that's why most students keeps getting it wrong, because you do not understand the concept behind it. Now, the next one is what? Error of commission. Alright. Error of commission. There's one key point that I want you guys to know. It is the type of error that is committed within the same class of account. So what do I mean? We have 5 elements of financial statement. We have our assets, liability, income, expenses, and our equity. So this error of omission is the type of error that occurs. It could be either within expenses, it could be within assets, it could be within income. You understand? It could be within liabilities. That is when you mistakenly record a transaction or a personal. Let's use a personal ledger for an example. You want to record a transaction that belongs to Olotu. Let's say Olotu is our receivables. Olotu, you are meant to record a transaction in Olotu and you mistakenly recorded it in what? O2. So because the name looks alike, they are under the same, they are both what? Receivables. You understand? Let's assume you received cash. I don't write too much because of I want to make this as brief as possible so you can understand it. Received cash of 20,000 from Olotu. You can try to write in your notes if you have it notes. Received cash of 20,000 from Olotu was recorded in Otu's account. You understand? So Olotu's debt is supposed to what? Reduce. You understand? Instead, we reduce what? Otu's account. So what are the two accounts? If you observe what I've been doing so far, it is two accounts that or more that are usually what affected, not one. So that's another sign that it is error that will what? Not affect trial balance. So what do you do in this scenario? Remember, you must have credited O2 in the first place. You understand? So what do you do? Remember, in this type of transaction, you have recorded the cash transaction successfully. The error comes between what? Olotu and what? O2. So how do you correct this? Simple. When you debit cash, the corresponding entry is what? It's supposed to be Olotu. So instead, we debited who? O2. Sorry, we credited O2 rather. So to correct this, we will debit O2 and credit what? Olotu, to correct that type of error. Yeah, it might not be looking really feasible right now because it's just an explanation, but if you should pay attention to what I'm saying, you will understand what I mean by this. So you grab. So that's what for error of what? Commission. All these things can also come out in your short answer question, at least your German question. Little things like this can come up and it will be a bonus for you. Now the next one is error of what? Principle. Now what's the difference between error of principle and error of commission? Error of principle is the type of error that occurs within, no, sorry, it is the type of error that occurs between different classes of accounts. That is, it is the error that occurs between, let's say, an asset and an expenses, or it could be an income and equity, or it could be asset and equity. Whatever way it comes from, there's no fixed form for this. You understand? But just know that they are not within same class of account. They are of different class of account. For example, in our two previous classes, when we were doing, I was dealing with ledger. There's what we call, I was dealing with a particular item. I was dealing with a particular item called, let's make use of motor vehicle, I guess. It was motor vehicle. And we also have motor vehicle expenses account. Let's do it this way. Now look at the difference. Let's assume you did maintenance on your motor vehicle worth, let's say 5,000 naira. That's the motor vehicle expenses. But because you do not have a good understanding of your double entry principle or your element of financial statement, then instead of you to record it in the motor vehicle expenses, you record it in motor vehicle account. That's very, very wrong, because motor vehicle account is an asset account. Then motor vehicle expenses is an expenses account. In fact, this one I even made it direct. Sometimes let's just assume, and they might not even tell you. They might just call it motor vehicle repairs. I think this is what I used in the previous in our previous classes. Motor vehicle repairs. When you repair something, that's an expenses. You understand? Not an asset. It's not as if it's going to add to the life of the asset. You are just repairing it. You are not doing an upgrade. You are repairing it. All this falls under IAS 16, but let's leave that for now. Expenses is different from an asset, so you need to take note of that so that you don't make mistake. So you understand? That's the keyword I want you to grab for error of principle. We'll be solving question, but not now. I want you to understand the concept. Now, compensating error. So what's compensating error? Compensating error is the type of error that occurs within two unrelated accounts. Now, what do I mean by that? I won't give it straight definition, but let us put it this way. Compensating error is the type of error that occurs when a certain amount is missing, or should I say lacking, between coincidentally, yeah, it's more of a coincidence something. Coincidentally between these two accounts or two different accounts. For example, let's say um sales and let's say rent. Yeah. Let's say it is, or we can also say it is a type of error whereby the amount is either overcasted or undercasted by the same amount. You understand? So both sales and rent could be overcasted by the same amount. Both sales and rent could be undercasted by the same amount. You understand? This one too, it has no fixed way, depending on whether it is an overcast or an undercast. You understand? So let me give a brief example, or let me even explain this overcast and undercast of a thing, because you guys do mix it up a lot. So when you are dealing with undercast, or whenever you see the word undercast, this is what you should do. You should record it in the actual part that it is supposed to be when you are dealing with undercast. For example, if you see something like rent undercast, what's rent? Rent is an expenses. So you are meant to record rent normally on the debit side, so it will remain there because it is what, an undercast. So you are supposed to charge a certain amount, so you charge less, which means you are going to be adding back to it anyway. So it is going to be on the debit side. That's an expense. Now for sales, it's supposed to be on the credit side, so it will remain on the credit side. Are you getting me? So because this is an income, I'm supposed to have a credit balance, and we were being told that it was undercasted, it will remain in the undercast. It will remain on its actual part. But if it is an overcast, then it will reverse. If the rent was overcasted, instead of us to debit it, we will credit it. And if our sales was overcast, instead of us to what, credit it, to what, debit it, to reduce the balance back to normal. So that's just that about that. So now, if they say both, they will state it in the transaction that both sales and rent was what, undercasted by a certain amount. Then what do? You just come and record it normally, and if it is overcasted, you do the otherwise, or you do the reverse. That's that about what, compensating error. Sorry, let me take this up to this point. Now, complete reversal of entry. Complete reversal of entry. This is the type of error of complete reversal of entry. This is the type of error that occurs when the account to be debited was credited and the account to be credited was what? Debited. You understand? You completely reversed it. For example, okay, let's say we are dealing with cash sales. So instead of us to debit cash, we credit sales, we debited sales. And instead of us to credit sales, we debited cash. Okay, might not understand. Let me write this. So we have cash sales. So let's assume we debited what? Sales. Especially those that do not know double entry with most of the time. This, you guys are the one that cause some of these errors sometimes. I'm not blaming you though. Alright, so you credited cash. Yeah, so this is a complete reversal of entry. You understand? Now, how do you record transactions like this? You will take the amount because you've completely, remember you've recorded it wrongly already. So for you to correct it, you multiply this figure by what? By 2. So it is the only error in errors that will not affect trial balance that will multiply by 2. You will multiply it by 2. So by the time you are going to correct this to debit cash and credit sales back, it will be debit cash of 200,000 and credit sales of what? 200,000. Now you might be wondering why. Is it not going to be overstated? No, it is not going to be overstated because you've recorded 100,000 initially. So 100,000 minus 200,000 minus 100,000, you'll be left with 100,000 back. So it will reflect itself in the transaction, in the financial statement or in the final account. Do you understand? So that's that on complete reversal of entry. Now, transposition error. Transposition error is synonymous, if not the same, with error of original entry. But what's the difference? The difference is that, now, before I go to the difference, this transposition error is the type of error whereby wrong amount is also recorded. But this wrong amount is not from original entry. That is, it is not from subsidiary book or source document. This type of error occurred when we are recording it in what? In our ledger. While this type of error occurs when we are recording it from our source document or our day book. That's the difference. But they will be treated similarly, if not the same, depending on the way the transaction is being stated in the question. You understand? So that's the difference between the two. They are the same. That actually, I would have sometimes I don't include transposition error because I feel okay, it's synonymous with original entry, but they decided to separate it. Fine, that's the difference between the two. You understand? So I'll be stopping here. You understand? For you to be able to grab this. I want you to understand this topic very well. I've done it before, but I needed to do it again for you to have a proper understanding of it. So yeah, this is where we will be stopping for this class, and I will solve a question on error that will not affect trial balance before I even move to the second category, that is error that will affect trial balance. So I'm sure I must have, you guys would have gained one or two from my class today. If you are new to this channel, this is what we do. We help students that might not be able to afford tutorials for in their professional journey to learn, you understand, to aid them in their reading, to assist them to read more efficiently so that they can become a better person, because I personally too pass through similar experience and I do not want you guys to face the same thing. All right, that was all for our video for today. Thank you very much for watching and staying with us up to this point. Kindly like, comment, and subscribe to our channel, and also share it with your other friends. Thank you very much. See you in our next class.